You're watching Notepad and I'm your host Ibrahim Sani. We continue our onward journey of looking back at 2019 and also trying to peek into the first quarter of next year and see what's in store for us. In this particular episode, we shall discuss at length about virtual banking licenses because, as you know, Bank Negara Malaysia is currently working through the framework of issuing virtual banking licenses and they are in the process of currently looking for consultation from the public very soon. What makes this story interesting is that if this moves ahead, and in all probability it will move ahead, we're looking at non-bank traditional players or non-FI players entering the virtual banking space. We're not just looking at the traditional banking operators, companies like CIMB, Maybank, Public Bank for instance. Those are just part and parcel of this particular journey. We're looking more towards other e-wallet companies, other digital financial companies, fintech companies. All of them might be applying for these kind of licenses moving forward. So here to untangle this particular revolution that is facing us right now, joining me is SHANKAR, the Financial Services Advisory Partner of EY, and hopefully we can try to understand this situation a little bit better. SHANKAR, thanks again for spending the time with us. It's towards the tail end. As I was confessing to you earlier, I was already on my holiday mood. I don't know how you guys are right now. Is everybody on holiday mood as well at UI?
No, we still have a couple of projects going on and some people are taking a break for the year end, and then, it's still mixed. But we're all waiting with bated breath for the upcoming virtual banking framework to be released by Bank Negara.
Let's look at the whole process of it right now. What is Bank Negara trying to do, and what is the objective at the end of the day?
Okay, so if you look at that from a process-wise, the publicly available information essentially is that Bank Negara will issue a guideline framework of consultation on virtual bank towards the end of this year, and then probably early first quarter try to wrap up with consultation from the industry and the interested players. And then what we expect them to do is that by Q2 to start opening up the application, and then the serious bidders were to put in a proposal. And essentially what Bank Negara is trying to do is, one is try to drive innovation within the market through the virtual banks. Second is also try to have the underserved market, financial inclusion for the underserved market. So today if you look at the Malaysian context from a unbanked population perspective, we are an almost 98% banked population, but from an underserved market, we have segments or sub-segments of the population consumer that's today been underserved by the traditional banks per se, like gig economy workers, silver hat workers and so on, micro SME segments. So I think what Bank Negara is trying to do via the virtual bank is try to drive financial inclusion into this market as well. The other segment would be the B40 as well. I think that should be addressed.
Yeah, I'm trying to understand a little bit better about why this segment is being underserved. What's wrong with the current landscape of the banking system right now?
So it's not about wrong. I think each bank, have their own strategy in terms of which other segment they would like to address.
It's called credit assessment,
credit assessment and so on.
It's only prudent for them to do so, right?
Correct. It's absolutely right. But if you look at where the market is moving, where the job market is moving essentially in the country, you have more and more gig workers coming on board, people who are working with Grab, Food Panda and so on and so forth. So these are the people with not steady stream of income and their ability to show that they're able to generate steady stream in income and so on means that they would probably not be considered for financial lending products and those kind of things. So what we have, where we have seen in other markets where you have virtual banks, is that they've got into this gap within that sub-segment to kind of provide services, and how they do it typically is they use different models in terms of doing credit decisioning and everything, and maybe their appetite for risk is slightly higher than that. So they are able to serve those underserved market that we see.
Currently, the non-DFIs, the DFIs are right now giving out credit slightly looser in terms of the requirements compared to FIs, and that has pushed up their particular credit worthiness. We're looking at 15%. Of provisioning of bad credit. If a person is not suitable to receive credit, they shouldn't, right?
Yeah, absolutely. But then, if I were to use, for example, Korea, in this part of the world, if you look at Korea was one of the first market to introduce virtual bank with Kakao Bank and K Bank about 24 months ago. And if you were to look at Kakao Bank, for example, and then they're one of the success story around the world where they're one of the 2 virtual banks that's making money, break even in less than 2 years and now on the way to make money. And if you look at their NPL portfolio and everything, they're no different than what the average industry NPL ratio in Korea, for example. So what it tells you is that going virtual bank and offering the products and services to this sub-segment doesn't mean that you do away with the right credit decisioning or the prudence in that. You need to have that, but it's just that the appetites and the models that we see players in the virtual banking using are different than what traditional bank has been used to. So
I want to attack that particular angle of Korea versus Malaysia, right? Korea, whatever that figure is of household debt, I don't know what the Korean household debt is, but clearly it shouldn't be as high as Malaysia. We're looking at 85% Malaysia household debt, am I correct?
Yeah, absolutely. But
So
Korea
we
is
wanna
there
rise
about
that.
as well. Korea is around that region as well, if you look at that. So I don't think so that's much of an issue. The challenge is, I think, around how do you assess properly an individual, for example, a gig employee worker who has income, I mean, so to say, but then today is not having the opportunity to get financial lending products from the traditional players as well. So I think that is where we're seeing the virtual banking players are coming in to fulfill that gap, where the traditional banks have not been doing that. Micro SME is also another areas where today, if you look at Malaysian economy, I mean, more than two-thirds of that are the backbone. SME, micro SME is the backbone of that. I mean, if you look from an employment perspective,
of course, like
80% of our employees are with the micro SME. So this is also another segment where, I mean, although the banks have been doing enough, trying to do a lot more in this segment, but we see more virtual banks trying to target this segment as well. In fact, if you look at in Singapore, for example, they're issuing 5 licenses, 3 for the what they call as wholesale banking license, 2 for the universal licenses. And the 3, most of the players we speak to, and informally I'm saying that, I mean, micro SME lending is one of the areas they would like to focus on.
The psychology of a corporate, SME all the way to GLCs and MNCs, is very different from individual like you and me. We look at debt or credit as not a form of capital. We look at debt as way to finance our ongoing operations. That's just how it is. I mean, I have credit card somewhere at 18%. I take a personal loan at 5%. I cover that. That's an individual decision. Businesses, however, look at credit as capital. They look at it as working capital to buy inventory, stock, hiring, whatever. Right? That is the fundamental problem that I have with increasing credit for individuals. They will not use this as capital. They will not use this as investment. Of course, I'm using a broad statement, but generally speaking, they will just use this to cover other existing debts. How is this going to be solved with virtual banking?
No, I think regardless whether virtual banking or traditional banking, you still have to come under the ambit of the overall requirement. I think with Bank Negara regulation coming out, you still need to make sure that the creditworthiness, the ability of the individual to pay for that is still within that rule. I don't think so the regulation would mean lax rule in terms of who you can lend to. There will still be within that ambit of making sure that whoever you're lending to still falls within the requirement criteria as well. So I don't think so that's it. It's just that there are sub-segments of population today that not being addressed. I mean, we look at rural areas, right? Do they have access to financial products and services? Maybe not. Gig workers is another segment. Silver hair economy is also another segment. The other one is foreign workers. We have huge population of foreign workers today, and access to financial product. Do they have enough access to financial product? Today, I think most of them are limited to remittances and some of the products as well. So question is there the sub-segment for them to go? I think the answer is yes. Question is, what's the size of pie? How are you going to make money out of that? And how do you ensure that while you're extending this lending product, is to make sure that you do it prudently and still be able to make money? Because I don't think so any consortiums who are interested in virtual banking is going to go out and say that, look, I'm going to throw all the rules out in the window and lend left, right, center, and finally face the...
While we're not supposed to trust banks, we can actually look at the track record. Banks, FIs do normally have more stringent processes moving forward. I can't say that well for, wallet players or fintech players. It's an unproven test case for them. They've only been around for just a few years.
Absolutely.
If anything, they might just be propped up just a few months ago just to go for this banking license, virtual banking license, right? How do we know that they're going to be as prudent as the FI's traditional boys, I suppose.
Yeah. So if I were to use Singapore and HKMA, for example,
Yeah.
where they have issued a license, Singapore is going to be issued licensing. The licensing criteria is pretty strict in terms of that there are capital requirements, regulatory requirements, which if in the case of HKMA, for example, the requirements is similar to what the traditional bank have. That means you have to have enough tier 1 capital, you have to follow the regulatory and compliance of any other normal bank. It's just that you're operating the way your target sub-segment is different. You operate without a branch network. You may have distribution network as well. So from a regulatory compliance perspective, it's almost you are being regulated like a bank per se. The only part that I think the other second element of that where we look at MAS and HKMA was that the requirements when you put in a application business case, they were pretty rigorous in terms of trying to understand how are you going to make money, when are you planning to break even, which are the sub-segments you're going after, and the way that they're doing is they're also trying to understand, you cannot simply say I'm going to after a segment where, Bank Negara or the central bank know that that's not a segment that really can be profitable or make money as well, because they're trying to balance between financial inclusion, innovation, as well as make sure that the consortium at the end of the day
Don't you think Bank Negara is overstepping their boundaries? They are not a corporate entity, they are not there to make money, they are a regulator.
Yeah, absolutely. But what they're trying to do is create innovation in the market, right? How do you promote innovation? So they as a role of central banker is to promote, facilitate and promote financial inclusion as well as innovation in the market. And I see virtual bank, if you look at Korea, Hong Kong and Singapore, what the government is trying to do is try to promote more innovation as well as competition in the market.
Yeah, but the 4 or 5 bullet points that you were talking about, it seems like they are trying to make business decisions on behalf of the players that are applying licenses for them.
No, they're not. Absolutely. What they're trying to do is make sure the prudence, at the end of the day, the role of a central bank is to make sure that the overall financial stability of the banking sector is protected. So you have well thought regulation, but you also need to make sure that how do you give enough space for innovators to come in, but to create enough innovation, but not to damage or destroy the financial stability of the market. So you have a balancing act trying to promote innovation, but at the same time trying to also ensure that the players coming in are bona fide viable players who are able to be successful in the long run.
Do you think that there will be some form of sandbox for players to try it out?
No, I don't think so. I'm not so sure about that, because but if I were to look at HKMA and Korea as well as Singapore example, it's not a sandbox. It's going to be typically once you get the license, about 9 months. You take 9 to 12 months, that somewhere between those period before you launch that. It's not going to be a sandbox approach. At least that's what I believe so.
Also, let's talk about other regulators in play. Do you think the Securities Commission is going to be brought into the picture?
At the moment, I don't think so, because the focus, what I understand is that focus is a lot more in terms of looking at SME, micro SME market as well as retail market as well. Pretty much virtual bank in Hong Kong, Singapore, most of them were the central banks under the remit of the central bankers rather than SC play.
We'll take a short break before we continue the conversation with EY on virtual banking. Thanks for staying on with us. We're still with EY, talking about digital banking, or sorry, virtual banking. Shankar, you were talking just now about why this was brought into the market. We challenged some few ideas on whether or not it's viable or whether or not it's necessary, more or less. But the most important thing that I picked up from the conversation earlier was on the extended services that virtual banking can offer to the market, which is not being offered right now, or which is offered in a limited way. Yeah. Let's talk about specific services that individuals and also SMEs or whatever companies can actually enjoy from virtual banking. How will things change if virtual banking is right now existing in the market?
So if you look from virtual banking, now most of the virtual banking players in other markets has launched. Korea. In this part of the world, I keep going. Korea and Australia are the two markets where you have seen players coming on board. Next 12 months, you'll see Hong Kong as well coming on board. And typically, most of these virtual banks, they have sub-segments that they go after. Their strategy is very clear. It's either they're playing in for example, gig economy, silver economy, those segments. And then what you see is that traditionally they do offer CASA, current account savings for basic products there. And then they move on to unsecured lending. So most of them eventually do credit card unsecured lending, as well as collecting deposit as well. And I think a lot of them play around, I think, a few features. Right? The key features is one is better customer experience in a sense that, for you to be able to interact with them purely via your mobile devices with eKYC and so on being introduced. You can, for example, in KakaoBank example, you can open an account in 7 minutes from your home or at convenience wherever. And in fact, when we did an analysis for KakaoBank, and traditionally prior to the launch of KakaoBank, the typical time frame that a customer takes to open an account was somewhere between 9 a.m. to 5 p.m. office hours, right? Precisely because you have to walk into a branch to open an account.
Yeah.
But post KakaoBank, what has happened is that account opening time shifted from 4 p.m. to 11 p.m., which means that people are doing at their convenience in their home. So the services enables you to do it at your convenience. That's one example. Second is, I think, in the case of KakaoBank as well, the growth. I mean, typically when you talk about virtual bank, you think about millennials. You're targeting millennials. You're trying to attract them because you think they are one of the target segment or age group that are more higher affinity to technology, very comfortable with mobile devices and so on. But in the case of KakaoBank, I mean, looking at the growth where, I mean, they sign up close to 9 million customers in 24 months. And what has happened is, if you look at the profile of the customers, the age group 40s, 50s and 60s are the fastest growing age group in terms of sign up. Of course, bulk
That's
of
crazy,
the base.
right?
That's crazy.
You would think that they would be averse to technology or...
No, and in fact, what we found out was that the 50s and 60s, especially the 50s and 60s, are saying that they're signing up because they find it so easy and simple for them to sign up that they don't think so technology knowledge is a necessity for you to do that. So imagine if you can attract the 50s and 60s to sign up, and they are the ones with most disposable income to spare with. That's where Kakao has been targeting and growing the fastest segment as well. Of course, the bigger base for them is still the 20s and the 30s, which is millennials and the younger working crowds. But then the fastest growth segment is the 50s and 60s as well. So technically, if you make it simple, a better customer experience, as well as price transparency. See, a lot, the other example Kakao did very well in terms of payments. If you look in UK market, for example, payments has moved away from traditional banks into non-banks as well. Even in Malaysia, if we look at today, I mean, most remittances are slowly moving away from banks into the non-banks players. You have Merchant Trade, you have Western Union and everything. They're moving away from the traditional banks to that. In UK, it's totally moved into non-bank players as well. So with Kakao, what they did is they did price transparency. If you want instant transfer, this is the amount that you got to pay. If you're willing to wait for 3 days SLA to transfer money across the globe, it's a lower cost. You make the choice. So what they have done is they have unbundled the pricing, allow the customer to make a choice in terms of what kind of services they would like to have at their own fingertips. So that's where we have seen some of the virtual bank players came in and changed the market, how the market looked at that from a pricing perspective, from the customer experience perspective, as well as targeted offering within the sub-segment as well.
Let's talk about the reception of the market, consumers per se, individual consumers, retail ones. When we look at deposit taking of CASA, for instance, do you think that the consumers are comfortable putting their money in a virtual entity?
Absolutely, because I think at the end of the day, I mean, you're going to be regulated by Bank Negara, and you would be under the supervision of Bank Negara as well. So
things like PIDM
will come in as well. I believe it will come in as well. So I think that certainty will be there. The question is, I guess, for virtual bank, the challenge to the non-bank virtual players would be players despite the backing of Bank Negara and PIDM and so on. How do you convince the customer, your target segment, that you are somebody that you can be trusted upon, and how do you build the brand upon that? That's where I think the banks, traditional FIs, have the advantage in the terms of bank name, right? Today, the numbers in your account is also digitized, right? It's numbers in your account, and you go to sleep and you happily sleep because you believe that the traditional banks the number will be there, it's all going to be there and everything. So the challenge is for the non-FI players is, how do you convince you that, one, I'm working under the ambit of the Bank Negara and all the regulatory supervisory framework is there. Second is, we know what to do with your money, and we can make your money work harder for you. So
you probably know a little bit more about consumer behavior than I do. Let me tell you my use case, right? So I have my CASA, and I have my credit cards, and I have my wallets, and when I go and buy Boost juice or whatever, right, take a Grab, whatever. I top up just enough to cover that particular service. Even Touch and Go Digital, for instance, I top up 50 ringgit, 100 ringgit, whatever, and you know, KLIA, Bride to Grab would take 65 bucks. I probably put 100 bucks just in case. You know, I'm not going to put 10,000 ringgit inside that particular Grab account, wallet or Touch and Go Digital wallet. Is my use case prevalent, or am I just this weird guy, outlier?
No, I think you belong to a particular sub-segment where essentially, I mean, you're kind of value seeker, right? What we call as value seeker. Essentially, you use your wallet because simply because there's promotions, there's benefits for you to gain,
rebate,
and so on. But if you look, for example, I go back to Kakao Bank example, right? I mean, their goal when they went into the market was that I'm not intending to replace your primary bank account. You will have your current primary bank account with the traditional banks, for example, with Maybank, your salary comes into Maybank, CIMB Bank, Public Bank, whatever it is, right? And what they intend to do is become your secondary bank of choice in the sense that, okay, your salary will come into your primary bank, but I want you to transfer portion of that amount into your secondary bank account that's owned by Kakao, and then you use me as a center of your life, essentially in lifestyle banking. So if you use for payments, I want you to use my product. So how do I allow my mobile device and mobile app to facilitate your lifestyle? So payments, toll payments, transportation payments, and so that's what the strategy, for example, Kakao took in terms of going there. So where we are seeing is a lot of the virtual bank currently are going in a strategy where they don't aim to be your primary bank provider services at the moment. Where they're trying to fill is the gap and niche provider in selected segments as well. So I think there is a role for traditional FIs as well, where they will still continue, because simply because the breadth and the coverage of product they provide, I don't think so any of the virtual bank today will go and say that I'm going to offer every single services that the traditional bank is offering. That's not the case. I mean, what they're doing is they're picking up a sub-segment and they're offering very niche products that fulfill that sub-segment as well.
Right. We'll take a short break before we conclude our conversation with Shankar of EY. Thanks for staying on with us. We conclude our conversation on virtual banking with Shankar of EY. Shankar, when we talk about the process of Bank Negara sussing out the market, asking for comments and framework and all that, do you think that when everything is said and done and Bank Negara is ready with the framework and now is sussing out the market, not sussing out, demanding applications from the market for the virtual banking license, would the public know who applied?
If you use the case of HKMA and Singapore and Hong Kong, right? I mean, some of the players openly declare that, look, I'm considering that, I want to do that, and I mean, there are various reasons why they're declaring their intentions. We see some consortiums are pretty silent as well, and they put in the submission quietly as well. So you're going to have those two cases, I suspect, in Malaysia as well. There would be players who would be openly going out calling press conference. As it is, I mean, you have some incumbents and non-incumbents who have said that, look, I'm interested, let me look at the guidelines, but I'm definitely keen on that. You can see in publicly available news on those players who they are. But there are also people in the background who are speaking to each other, trying to form consortiums, and they will pull the trigger when they see the actual guideline and the process opens up.
Because you're an expert opinion, you are a partner of EY after all. Do you think that all banks will apply? Or one or two would sit out?
I definitely think so. I mean, I think
what,
so. Because
really? Why?
No, because I think at the end of the day, if we look at similar nature in Korea as well, I mean, the question was, I mean, you, for example, Kakao Bank, if you know, one of the investors in Kakao Bank is Kookmin Bank, the largest bank in Korea as well. And for them, they looked at it as two rational, right? So one, like it or not, the virtual banks are going to come into the market and disrupt the market. So how do I partner with them to learn and bring back that knowledge, that learning into my mother organization, parent organization, so I infuse my organization with more innovation, I think. Second is that if you think that they're going to disrupt the market, what more not to team up with an up-and-coming consortium so that you are able to also provide, because if you look at any players in the market, I mean, when we did analysis in terms of potential players from different segments who may be interested. And when you map across a few dimensions, when we did the evaluation, not any single player can claim that I can do every single thing that I can. One party can do all. So in our belief, it's likely to be a consortium approach where somebody is going to apply for this virtual bank, will bring in a form of consortium. So typically when we do evaluation, we look at 5 elements, right? That one is around capital. Who's going to provide the capital to run a bank? Banking industry is not capital intensive, right? I mean, you got heavily, right? Second is who owns the distribution and the customer base, right? Who's going to bring that access to that? Third is about product manufacturing. I mean, if you talk about non-FI players, right? I mean, do they know how to create products that what the consumer market wants? I mean, it's easy to innovate, but innovation in regulated industry
it's crazy,
right? It's difficult.
Crazy. So and it's the same people. Probably the e-wallet guys have to poach banking players to build up CASA products or whatever.
And then fourth is around risk management, right? Look, you're in a regulated industry. You need to know what the regulatory compliance requirement. You got AMLA, you got all the FCC requirements and so on. You need to comply with them. There's no two doubts about that. And finally, so brand, right? Question we spoke earlier about branding, right? I mean, the banks have their strength in terms of people attribute the name with stability, and they know they can go to sleep. At the end of the day, money will still be there, versus an unknown brand that's coming in and say, I'm going to be your virtual bank, trust me, put the money in there. So if you look across these 5 elements, there will be gaps where non-bank players will need help around product manufacturing, around risk management as well. So we think there will be consortiums formed. Yeah.
Okay, so we have to conclude our conversation, but I just want to understand, as a consumer, when can I be the first customer of a virtual bank? I'm an early adopter for anything. So
if I were to put a prediction, assuming that the licensing process concludes and you get announcement by Q2, end of Q2 next year, likelihood you would see early Q1 2021 with the first virtual bank launch.
2021?
Yeah.
Okay, so
it takes time.
Yet in 2021. That's the point.
Maybe you'll be surprised. Maybe somebody is ready. I mean, there are players.
I doubt. No, even if the somebody is ready, it's
you still need to go through the process.
Absolutely. It's the lowest common denominator, catering to the last player that is agreeable to this particular thing.
But as a consumer, I hope I'm found wrong that, I mean, hopefully by end of 2020, there will be somebody bold enough to say that, let me launch a first minimum viable product for you, for the market to
because
test
of the nature of virtual banking. Sorry, I'd like to you. This is my final question, not the judgment. But do you think that Kakao Bank or any other international players are allowed to operate here in Malaysia?
We think right
it's virtual
now,
banking.
Yeah, it's virtual banking. But I mean, within the licensing MBA, assuming they come through the consortium,
Kakao, Berhad, whatever. Right?
Why not? And we do know that some of the players in the UK, for example, the likes of Atoms and everything, have the platform. So they own and run the virtual bank in markets such as UK. But what they have done over the years is build a platform that they're able to take and provide as a services to would-be interested consortiums as well. So that's the other angle we hear. I mean, tech players that have front-to-back platforms are offering their services to the consortiums to say that, look, I know how to stand up virtual bank for you, use my platform, I'll work with you guys. So, yeah.
Fantastic. That was my conversation with Shankar, KANABIRAN of EY. If you've missed any part of this interview, just head on to astroawani.com, look for Notepad there. You can also enjoy these kind of interviews on your mobile devices. Just download the freshly launched Astro AWANI app, wherever you get the application. Also, this show is on podcast. There's a podcast app within the Astro AWANI app, or just grab this from wherever you get your podcasts. Until next time, thanks very much for watching, and goodbye. All right, very good.
Thank you. Thank you, man.